So the third quarter of 2024 has been one of the most interesting quarters we've had. I think what you've seen is a more volatile market. You've seen markets moving around a little bit more. You've seen the likes of Nvidia, which is one of the market leaders for 2024, come under pressure. And I think that's one of the things that we've seen in the third quarter is investors perhaps stepping back from a stock that they would have normally in 2024 bought and bought and bought. And that for us just goes to show how far that stock has come and how at risk it was to a pullback, the likes of which we've seen in the third quarter. So one of the hallmarks of the third quarter has certainly been this tech-led rally that we've seen, this AI theme. Take a breath for a moment. That's not to say that it isn't a good theme, a good sector to be invested into. We've just started to see that slow down a little bit. Now, what's really positive about the third quarter is we've seen other areas start to pick up, other areas that are more associated with cutting rates, because that's what we started to see in the third quarter, the UK and Europe starting to do that. But you've also started to see the US being very loud about the fact that they're ready to cut rates. And all of that has prompted investors to start looking at other areas of the market, notably the UK, Europe, smaller companies, emerging markets as the dollar starts to come off. All of these areas have started to look quite good. China's still a bit of a problem at the moment, but there are other areas that we can get really positive about. And we've been looking at those areas in the portfolios and started to try and invest into those areas. One of the hallmarks of being an active manager is owning what we think is really high quality for the long term, and importantly within a diversified basket. So we've always held high quality across the globe, not necessarily within US tech, although we do own a fair bit of it. But what we try to do is make sure that our client portfolios are going along with that. And what we've seen in the third quarter is very much the market coming round to that way of thinking. Is starting to look at those opportunities and starting to invest into them alongside TAM. So we've really enjoyed the third quarter, despite the fact that it's been slightly challenging, because on a headline level, you can see markets slightly weaker. Predominantly that's because tech has started to pull back a little bit on those lofty valuations. So we don't think it's necessarily a problem. On a headline level, it looks negative, but under the surface, we still see a very strong market. We still see a market that's ready to rally. We see a market that's broadening out. For us, all of those are really positive factors as we move forward into Q4. When we look at bonds, we think that the bond market has been challenged for quite a long time because rates have been going higher and higher and higher to combat inflation. What we're starting to see is those rates coming down now across developed markets, and you can start to see the bond market reacting very positively to that. Specifically sovereigns, so the likes of gilts and treasuries, doing quite well. They're having a very strong quarter at the moment because of that perception that interest rates are coming down, because of that perception that it's a loosening of financial conditions, which is very positive for bonds. It's also positive for the likes of small caps, for UK, for Europe. So we're starting to see that synergy coming to play, which is very positive. What we've been doing predominantly through 2024 and some of 2023 is looking at the bond market and saying it is a challenged area, but where can we invest to try and get those returns? Where can we invest to try and get that performance against a market that is challenged? And we've had some really, really good success in 2024 in doing that. And what we're starting to do now with rate cuts coming to the fore is we're starting to take profits on some of those areas. Taking profits means selling those areas that have done really well and moving into the likes of treasuries, moving into the likes of UK government debt, which have all been really good performers in the third quarter. I think the market is looking for a lot more cuts in the back end of this year and into 2025 than we think is reasonable. So we expect a little bit of volatility as we move into the back end of the year because of that. But what we're broadly anticipating is a more positive market for bonds going forward. Another area that we found very interesting in the third quarter is Japan. Japan's done extremely well. It's been one of the success stories in 2024 and 2023. We've started to see that come under pressure. Some of the dynamics within Japan have started to change. They've started to raise rates. They've started to protect the yen, which has been weakening and weakening and weakening, which is good for an export-led economy. What you've started to see is a little bit more volatility coming back into the Japanese market over the third quarter. Broadly speaking, we're still positive on Japan. We think that there's a long run of positivity that we can see for Japanese companies as they start to reform, as they start to come more in line with global companies. And we see that positivity coming through. We don't think that's over. But over the short term, we do envisage a little bit of volatility from that market as it starts to grapple with raising interest rates to combat an inflation problem when the rest of the world is recovering from that inflation problem and seeing inflation coming down, with Japan seeing it going up. So that's one of the areas that we're looking for at the moment. The commodity market is an area that we're positive on at the moment. We're seeing it coming under pressure, rightfully so, from China pulling back, China struggling economically, but also investors starting to be concerned about a global slowdown. We're seeing that in the oil market as well. We think that there's some really attractive opportunities within the commodity market that we're going to try and take advantage of. One has to look at diversification within a client's portfolio, and commodities is always a great way to do that. So we want to ensure that we're including the best possible opportunities from within the commodity market, especially as we think it's starting to reach an oversold place, to include those in investors' portfolios.